Jamie, what you got today?
Hey Scott, hello everybody. Welcome to another edition and actually the last office hours webinar for June. Wow, June just went poof. It's almost over and July will be upon us. Good old 4th of July coming up soon. Hope everybody's got some plans. In any case, welcome to office hours. I'll be your host today. Steve Gomez is on some well-needed and deserved R&R. Kind of thought Mr. Andy might be my co-pilot today, but looks like I'm solo. So I'm going to I'm going to do my best to keep my eyes on the questions panel. So if you do if you do submit a question, it might take me a little while to get to it, but feel free to go ahead and post it up anyway. So before we get going here, just want to take a moment to make the lawyers happy and just make everybody aware of the fact that everything that I share with you guys here today, whether it's this webinar or any of the other 9 ones that are coming at you a week, it's for educational purposes only. If you do need an investment advisor, someone like an RIA, registered investment advisor, so that they can tell you what to buy, when to do it, when to sell it, all that good stuff. Please seek out someone like that, an RIA or a licensed Series 7 stockbroker that can legally dispense that type of information to you, because we're just a bunch of guys here, old traders, using the software in real time, having a little bit of fun with it, showing you what we like to watch, and hopefully getting you some good ideas on the screen there. So before we get going here, all of you regular attendees, bear with us here for a second for the new people. I'd just like to take a moment to give everyone an idea of Barry opens the doors 30 minutes before the open and continues to trade and showcase his trading styles and the way that he uses the TA technology all throughout the trading day. As it would be, Barry is also taking some nice vacation time. So I think he'll be out for the week, but he's got some very qualified individuals standing in for him while he is absent. Trading Room just got a little facelift. We started using some new software. It's more conducive for everyone, not only the moderators, but the users as well. Finally getting the kinks ironed out. Barry's liking it a whole lot. So the great thing about the Trading Room, other than the fact that Barry's in there and it's a trade ideas related room, is the price, $0.00. And if you've taken the time to shop around the web for trading rooms, you've probably figured out that most of them that are worth their salt are not free. Whereas Trade Ideas Room is zero charge. You don't even have to be an actual subscriber to get in there yet. But that's part of the transparency that is Trade Ideas. Usually about 400 or 500 people in there, can spike up to 600. And I would only expect that total to grow as the fall kicks in. So if you haven't gotten in there yet, it's a great time while we're in the summer months to get in there, get used to everything. Start making use of that resource. Of course, today is Monday. You get me, usually with Steve Gomez, but today it's just yours truly. Steve Gomez takes the helm for Tuesday's trade of the week, which, since he is out, Andy Linloff will more than likely be filling in for him tomorrow. Now, Wednesday rolls around. We like to change it up just a little bit. We bring in the founder and CEO of Trade Ideas, Mr. Dan Merkin, along with our Chief Technical Officer, Brad Williams. Always a great place or a great time with the Wednesday webinar to get a little peek at what might be coming down the developmental pipeline. Brad and Dan like to show upcoming things, features, enhancements that are coming down the pipe. So always a good show with those guys. And then typically Andy rounds out the 5 p.m. Eastern webinars on Thursday with Andy's Trading Studio, and I typically ride shotgun with him. Of course, on Fridays, we change it up completely, and the ever popular Friday support session where anything is fair game, whether it's Brokerage Plus, Holly related questions, strategy fabrication, or just basics. All you have to do is show up and ask the questions. Typically, it's myself, Steve, Sean, Andy, all in there. And I think the full crew should be back by the time that Friday rolls around, so we will see. So that pretty much sums it up for the 5 p.m. Eastern webinars, but the hat goes a little bit deeper here. We've got 4 additional webinars in the form of TI University coming at you. These guys start at 12 p.m. Eastern, Monday through Thursday. Beginners on Monday, 201 on Tuesday, intermediate Wednesdays, and advanced 401 on Thursdays. So the good thing about these guys is that the static or the content remains static. I know probably a lot of you out there might have 9-to-5 jobs where you can't necessarily watch these things in a live environment. If that is the case, fear not, you can go and watch these pre-recorded versions since the content is the same on our YouTube channel. So live is the best way, but if you can't make it, go watch the pre-recorded versions on our YouTube channel. Always like to show a little slide as to how our subscriber base has responded, or how the user base has increased, I should say, since the introduction of our AI modules in the beginning of 2016, when we first introduced the first Holly 1.0, or as we affectionately call her, Holy Grail. Since that point in time, things have changed. We've added 2 additional ones, Holly Neo and Holly 2.0. Now, coming down the pipeline, we've decided in order to make it a little easier to follow, we're going to be consolidating all the Hollies back into one. I'll give everyone a little peek at what that will look like since I'm on the latest development version, which has that feature. Just allow you to basically put everything into one compartment, not have to watch 3 different windows, in essence, make it easier to follow. And of course, along with those types of changes, we are always actively working to get new strategies, better performing strategies into Holly. So I would hope that some of these new strategies make it into the next build before we release to the users as well. In addition to that, this slide, we've just recently started including, not necessarily a Holly slide, but increased at Interactive Brokers since we introduced it. And of course, you got live orders in blue, demo orders in orange, and just a slow tick up month by month basis here. So what does that mean? Well, it means that people are liking what we gave them in the form of Brokerage Plus, right? For those of you who might already be using it, you know exactly what I'm talking about. Or if you're an IB trader sitting out there, you're like, well, what is this Brokerage Plus? It's basically just an add-on interface that lays on top of Interactive Brokers and connects to it. And you can use our interface to trade, whether it's manually or popping your own fabricated strategies that backtest well in there for automation, or even automating Holly trades as well. So while we can see the number of live transactions in the blue bars, we can't necessarily segregate them into, okay, these are Holly trades, these are people just doing their manual trades, but all in all, we feel that Brokerage Plus is a more intuitive way to trade going through IB. Just the interface makes a lot of sense. It's easy, big buy and sell buttons, ability to write your own scripts for order entry, all kinds of good stuff. So if you haven't been using Brokerage Plus, get in there and definitely check it out. All right, on to today's agenda. And usually at this time in the webinar, I pass the mic over to Steve or Andy and let them do a, more or less a market recap of, where we sit on the big board here. Let's see here. Slava is saying they can't see. Well, let's see here. You should be able to see the itinerary here, Slava. So if you're not getting the full picture, Scott, can you chime in here and let me know if you're seeing my screen?
Try sharing it out again. It's not there.
Okay. Okay. I don't know what happened there. Let me know if it's back now. Okay. All right. Perfect. Thank you. All right. Well, in any case, I could back into all of these slides and repeat myself, but based on what I just said, hopefully my audio is working. So once again, just showing how live executions have been going up month by month as people adopt to Brokerage Plus and continue to use it. Okay, so no need to backtrack there. As I was saying earlier, typically at this point in the webinars, when I pass it off to Steve and let him give us a little, analysis on the overall markets, where we've been, where we might be going. However, once we take a peek over here at the SPY, Let's see, Monday, Friday, Thursday. Well, everybody got a big surprise last Thursday when not only did we not creep up to these levels and bust through, but we actually gapped above all-time highs, right? As everybody can see from here, which was a little surprising to all of us, Hey, we thought it might take another few days to grind up there with small gaps in between, but no. On Thursday, we gapped all the way up here, came all the way back down, had a close above, but then on Friday, we had this action right here. And then today, pretty much just barely, staying within that wick from Thursday, but getting a little bit lower than the close Friday. Now, on the gap that we had here today, as we can see here, we had a gap up, super small, 22 cents. We had a very small gap last Friday again. A lot of the times when it's a small gap, we're like, okay, we'll take the small gap because maybe we'll get to participate in the actual move. And that actually came to fruition today, all right? When we look at the SPY chart here for the 15-minute candlesticks here, you can see the prior day, Friday, we closed right here at 294, and then we opened today at 294.22. So a whopping 22-cent gap up. And then, of course, what did we do? We came up here and we popped highs by what? 20 cents at the high of this candle, 24.50, and then we came up here and we topped out at 24.58, right? So it's very interesting here. And what I mean by that is, for those of you who attend on the regular basis here, I like to consult more or less what I like to call sometimes my crystal ball, which is in the form of the compare count window that I take a reading of after the first 15 minutes of the market. And hadn't seen these types of readings in quite some time. But in any case, pretty significant downside readings on the big cap stocks capitalized in excess of $4 billion, basically just looking at stocks and keeping count of the ones that are hitting highs versus lows in the first 15 minutes with the added benefit of accelerated 1-minute volume. In other words, a lot of the times this can give us an idea of where the market will be headed for the remainder of the day. Doesn't work all the time, but it's uncanny how accurate these readings can be on a week in, week out basis. Maybe 3 to 4 times a week, they can give us a little peek to give us a little bit of edge, so to speak. So it's interesting to see first 15-minute candle here, right? Then for the next 30, 45 minutes, we crack up here. And as Steve and Andy and I all like to point out, what do we got here with the green simple moving average right here, the 10 period? So we kind of flop around up here, and then about 45 minutes, about an hour and 15 minutes into the open after we pop these small highs here. What do we get right here? We get a close below that 10 period average, close, 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 going sideways, and then what do we have for the rest of the day? Just a slow grind down with a lot of oscillation in these candles, all right? It was not the easiest trading day, so to speak. I mean, trading's never easy, but, it doesn't matter if you were long or short. Especially there were predominantly, from what I could see, a lot more shorts coming through my manual windows today, whereas we had Holly predominantly long today. All right, and we'll get into that in just a moment. But once we closed below this 10 period here on the SPY, it was just a slow grind down. And with these wicks on the candles, it didn't make it easy. It's not like it was just a stair step here, but it was up and down, up and down, up and down, the whole way down, right? So interesting action and a lot of short activity based on what I saw through my manual windows versus Holly, who's the statistical model, who was predominantly on today. And guess what? When we tally up Holly's totals over here from Neo, Holly Grail, and 2.0, she wasn't up today. She was down slightly. Having said that, there was still some good risk-on opportunities in her plays, and we'll get to that in just a second here. So first off, just wanted to point out, not a whole lot to talk about since we gapped to all-time highs. We've given just a little bit back, kind of creeping back down into this level right here, for probably more than likely a little bit more sideways vacillation. The last thing we wanted to see on Friday was a close like what we had here, right? Buyers took it up, couldn't maintain, closed down here, and then here we are, just kind of sliding right back into that range that we were in, or never really had the chance to even vacillate in that area, which is what a lot of us were thinking with that big gap there. But oh well, now we're here, and we'll see how long we spend in this area moving forward. We could spend days in this area, or the way the market's been lately, who knows? We could gap right up again. We'll just see what happens, see if any big macro news hits the tape or anything like that. Okay, I'm assuming everybody can still see my screen. That's a good thing. So let's just jump on into the rest of the content today. So expectations, we've talked about that. Pretty uncanny how we did get a moderate short bias only to have the market grind down in not the most conducive way, but a down move is a down move. And now let's talk about Holly, because Holly was pretty active today. All in all, we had 35 signals. I think my math is right there, 28, yep, 35 total signals. What I like to refer to as a medium to large type trade count. And after we tally everything up on those 35 trades between all three modules, minus 47 cents. So just a little bit worse than a flat, but on quite a few trades. And so really, you know, whether you're a human or a robot in this case, or an AI, we should say, being down 47 cents isn't the end of the world, but in this case, it would be, you know, a commission bill that we have to contend with, and of course, that comes out of our net profits. So a down day if you were following Holly completely or doing any automation from Holly, as she was down 47 cents on 35 trades. Now, we do have some risk on to talk about here. Even when she loses money, there are those trades that continue to run or that do very well. And we're going to talk about the risk on, risk off spread. And notice I have one Holly strategy panel here with all and you know, when this is released, we'll simply be able to right click here. You can view the individual segments if that's what you want to do, or now you can just click on all and have everything here. Now, my segment column got pushed way over here. And if you really want to know which Holly segment is doing the spawning of the trade, you can have the segment column as well. Neo, Holly Grail, 2.0, if you want to keep tabs on that. But in any case, the ability to monitor all strategies through one panel here, and then the ability to view all trades as well. We'll still have the ability to go segment by segment, but now you can see I've got all trades displayed in one blotter. And of course, the blotter is pretty big today if we're just looking at one. So let me just stretch this guy out a little bit here so we can see all the trades. And we'll talk about the risk on opportunities that were there today. So risk on, sort by risk on. And it's pretty obvious when I do that. We've got risk off over here, got risk on over here. And we can begin. Biggest risk on, risk off spread in the form of a short. Now we can see Holly was predominantly long today, so it's no big surprise based on my comments earlier. What I saw coming through, based on my compare count windows and my manual windows, I saw a lot of good short setups today. Now Holly's a statistical model, and based on the prior few days, you know, from a statistical standpoint, there appeared to be a lot of alpha on the upside, but as we see here, a little bit different of a story when you put the rubber to the road, so to speak. EMN, a classic example here of risk on and risk off spread. Risk off, Holly makes 14 cents on a very decent entry up here. Let me just squish this up a little bit. And by the way, ladies and gentlemen, we all get the developmental version first so that we can test it, make sure there are no bugs in it. I've noticed a few bugs in this new version. Nothing major, but sometimes my arrows won't be on the right candles. This one looks accurate, but if we see that moving forward, it is a known bug. That's why we do this. I've already reported it to the developers, and they should have it ironed out. But if we run into any snags, that's what's going on here. It was driving me crazy earlier because I'm like, am I just seeing the wrong bars? No, it was a bug. So in essence, Holly, timed exit here for the reason that she got out. Now, if we want to go back there and see what that timed exit was, we can just go back and find the strategy, putting on the brakes here. And of course, that was from Holly Grail. So we can use this sometimes to shrink the data set down and look at putting on the brakes. There's putting on the brakes. We can see it was designed around a 60-minute hold time there. So Holly makes the entry here, short at 76.67. Not a bad entry. You know, after that wick was put in, we got a little bit of gyration. Of course, we can't see the stop until I shrink my window up a little bit here. We can see the stop way up here. So once she puts on the trade, we do get positive and negative flow as we ebb and flow around that entry line, which is completely normal for a lot of these trades. Hey, we all like it when we get that immediate gratification, but next best thing is a little short-term consolidation while it figures out which way it wants to go, and hopefully it goes our way, but not getting anywhere near the stop out version there. Okay, so what do we get here? We get a little sideways action, which a lot of the times when Holly gets sideways action, she will exercise one of her audibles in the form of profit save or reduce risk. Didn't do it on this one, made it for the whole duration of the 60 minutes, closes the trade out somewhere right around here. Books are 14 cents, right? So all we have to do to go risk on with Holly is go, yeah, I like what's happening here. We've got a downdraft in the day. Maybe you're looking at my compare count windows or another version that you like to watch. And you're like, yeah, you know, from everything that I'm seeing here, it feels like we might be heading lower. We're already in the money here. So I tell you what, I'm going to stick with my trade here. We can keep the whole lot, or we can do the old 50-50 version, which is always the best way to do it until you get used to it or get comfortable going risk on when Holly is closing a trade in risk off mode. So when we see it right here, we're in the money. So we could have easily said, you know what, I'll book half my profit with Holly, take that 14 cents. And in this case, a break-even stop would have kept you in for the remainder of the day. As we can see, kind of creeps up. You book the profit on the first lot, set your stop to break even on the second lot. That way, if it does get you out, you flat the second lot, you still made your money on the first lot. But in this case, 66 more cents was on the table. That's a big multiple there compared to 14 cents, right? And if you just stuck with it, maybe, you know, once we got past here, you know, just keeping an eye on the 10-period fast line, and it pretty much would have kept you in the trade for the remainder of the day. A lot of other trades were breaking up on the fast line for no reason. I was in a couple of trades today myself that looked beautiful like this, but they didn't want to behave. And there were a lot of stocks that looked really pretty today that looked like this that didn't behave, and I've saved a couple of those as well to show everybody how fierce these markets can be when the volume is low. And by the way, check out the big tracking ETFs. SPY, 67% of normal on volume, Qs 57%. The only one that was bucking the trend was the IWM, right? You know, Steve and Andy have been talking about the IWM, not really participating ad nauseum in their webinars, and today was a classic example of, well, not only was it not behaving, it was going down a lot more than all the other kids, right? And maintaining 46% more volume than these guys. So it's going to be interesting to see what plays out for the remainder of the week. But all in all, some beautiful risk on money in this EMN trade today. Let's just take a little peek at the volume here. A lot of stocks moving down, and as we can see here, a nice move down, and once again, not even finishing the day on a 1.0 relative volume, but the sellers were in it, they were consistent, and that's what you got from EMN today. Now this little guy right here, a low dollar stock. EMNT is $76 stock. Now we're going to look at the biggest winner of the day on a percentage basis, which came from the float on strategy, which is looking at stocks with a float of less than 20 million shares, or somewhere right around there. Let's take a peek here at what the float was on MLNT. Oh, here we have it, 8.44 million shares, and significant volume, finishing at 2.46, usually kicks out about 2.1 million average on the 3-month. Finished the day doing almost or over double that at 5 million shares. And Holly had a beautiful entry on this one right here at 538. All right. A couple of nice things I like about this trade. Not so much the range break, since that wick kind of screwed it up. If it would have been a little bit lower, maybe a second time, maybe a nice opportunity to bolster the position. But then again, that all depends on if you're a wick person or a candle body person. That's really subjective and up to each individual. But a couple things I like about this entry here. Number one, we got statistical probability from the AI, because that's what it's all about, MLNT. And Holly has been doing quite well in some of these low dollar stocks lately. Sometimes the low dollar stocks are low floaters, other times they are not. In this case, we had both of the characteristics, low dollar and low float, which not necessarily a bad thing, can be a very good thing, as it turned out to be in the case of MLNT. So number one, as the entry came out, we're right on the fast line. Prior 30 minutes, looking back at these two 15-minute candles after we took the little downturn, boom, just bouncing right off that fast line. So we see 3 consecutive candles. We see the fast line acting as the trampoline, gives us confidence to make the entry here. First positive factor is that it's coming from Holly. We got statistical weight behind it. We've got volume behind it, and it's riding the fast line like we like to see here. So boom, as soon as we get the entry here, this is the classic case. This is what I was talking about earlier. 15-minute candles here. What did we do for an hour after Holly got into it? We went sideways, right? Why did she get out? There goes that audible right there. Reduce risk. A lot of the times when these things are going sideways, ebbing and flowing around that entry line there, Holly will pull the plug because it's not moving up, all right? In the case of a short, if it's not moving down fast enough, which if I revert back to EMN here, we had similar action. Now, we didn't quite make it an hour and we got a down move. That's probably why. Penny winner, the epitome. Okay, this reminds me so much of the past 20 years, whether it was me or a comrade of mine, sitting next to me day trading, where you just like, this thing's not working, I'm going to get out. And as soon as you get out, whammy, all right? And whammy, this one did. So all we had to do here is exercise a little bit of patience. Number one, we got statistical probability. Number two, we got the fast line. Number three, adhering to the fast line. Number four, not gyrating anywhere near our stop loss and doing high volume. So all we had to do on this one was be patient and go, you know what, no way I'm getting out of this one. It looks good, 4 different factors that I laid out there. And then what do we have here? As soon as Holly closes the trade, a little tick higher, then off to the races, right? So once we got out of the woods here, it was just nothing but grind up for the remainder of the day. All you had to do was sit in it. Interestingly enough, a lot of Twitter people, some other people that I follow were all in this trade, and I was like, hey, did you get this off Holly? And they're like, well, yeah, some people got it off Holly, some people got it off other things, but there were a lot of people in this trade today because it had a lot of very positive characteristics to it, whether it was statistically inclined, volume inclined, a multitude of things. In any case, it turned out to be the biggest winner for Holly today, posting up almost a 10% gain before the close. Now, if you're a candle body or a wick person, still, it did present a little bit of opportunity to bolster the position. Candle bodies right here, we get in, on a range break, whether we use the candle body or the actual high of the wick, and there was still juice left in both of those opportunities there, which is always a good thing. If you can add to a winning trade, especially one with this many positive qualities going on, always a good thing. Probably one of the hardest things for new traders to figure out is, when do I add to a winning position, and this was definitely one of those. And Claude, I see your question here. The question was, of all the Holly trades could call out in a day, does the system guide you into taking the best probability trades? And to address that, I would pretty much just go back to the strategies panel. If we put this back on all strategies, so we can see these were all the strategies that all three modules came to the party with today. If I sort by win percentage, you can see trend play showed up at 75% win factor according to the back test and optimization before the market opened, right? It spit out one trade and it won. Now, not really a big deal when it spits out one trade and wins, because then you have, a guy like this spitting out one trade and losing, underperforming at 0%. Nice chart, spitting out three, coming into the session at 63.5%, but ending the day overperforming slightly at 66.7. So it's not always the ones with the highest winning percentage coming into the sessions that end up doing the best. That certainly can happen, but there's no guarantee here. Matter of fact, let's go back and take a peek here. MLNT was float on, which actually underperformed today, coming into the session at 63.6, only hitting one of two for 50% win rate, but delivering the biggest winner of the day. So that's the whole thing about Holly. It's a statistically weighted system. So we know that anything coming out of Holly at least had a 59.1% chance, all the way up to a 75% chance of doing what we hope it does. Longs going down, longs going up, shorts going down. But just because we have statistical probability on our side does not necessarily guarantee success over and over again. I always like to use the poker analogy. If you're a poker fan, you watch poker on television, why is it the same guys always showing up at the final table? Well, it's because they understand statistical probability, but by no means does it guarantee that they're going to win. You can play poker with perfect statistical probability and still not win, because somebody stays in when they shouldn't, and they got the 1 out of 16 card, 1 in 16 chance that they just gambled and they got it, and you lose, right? Well, it's kind of the same thing with this statistical model, because a lot of things come into play that we can't necessarily see or predict in a back test, right? This comes into play a lot when we talk about automating Holly's signals. Well, trading trading from a manual basis, because this stock ALKS was trend play short. Now here we go. There is the one play that the highest weighted probability strategy came out with today, and I really like to play range breaks from the open, and this is a perfect example. Now, this is not a range break strategy, but sometimes these statistical models pump out a signal and you're like, oh, this also just happens to be the exact pattern that I like to play. This happens time and time again. Usually it's to the upside. It's what I like to call a secondary factor here, right? So we know we got 75% success potential coming out of this strategy. Then we see it coming out right here. It's a perfect range break. See how, we put the high end up here, put the low end down here. We're range bound in a very nice and tight range, and then whammy, okay? So, if I was trading this manually, I'm like, beautiful, because I can short it coming through here and use this level right here as my stop loss. Holly has a little bit juicier of a stop loss right here. And so you can see what happens here. Punches through that range and just slowly grinds down the remainder of the day. Why did Holly get out? Let's take a peek here. Timed exit. So trend play, 30-minute hold time is what that strategy is designed around. We can see right there. So she does what she's programmed to do, right? That's what Holly's programmed to do. She can't read charts like we do. So I'm in this, I'm thinking, this thing is beautiful. This is what I look for on a manual basis. Holly brought it to me. Dang sure taking this one. It's working. Why get out, right? Why get out of this one? Worst case scenario, we're going to stay in it, set our break-even stop right back here, never gets back up there, and we just get the slow grind down today. So this is what I like to call, hey, it's a Holly play, just so happens to be my favorite manual pattern that I scan for. And so that's going to give me additional confidence to make that trade and stick to it and, not make 8 cents in it, but get the whole shtick here. Because once again, what do we notice? Oops. What do we notice right here? What do we notice with the 10-period average? Staying well below it the entire time, not even pecking at it. A lot of the times it'll get right up to it, maybe wick through it, come back down. But no, this one just rolled over and never gave us any fits whatsoever. We can also always do a little consultation of the daily and, kind of size it up and figure out how much room we might have in there. Once it got past this point, anywhere in this candle down here was fair game. We didn't quite get down to the bottom of it, got close to the bottom of this one, but, just smooth sailing on that one. So big difference between 8 cents and 45 cents there. Another 35 cents was left on the table. And now the last one here, which was once again a short play. Now, it's no coincidence that 3 out of the 4 risk-ons that we had today were short plays, right? Even though Holly had a long bias, and I see your question out there, Marguerite. What is the long bias? And what I was referring to is Holly had a long bias. If we look at all the trades that she put in today, most of them were longs. Out of the 30 some odd trades that she spawned, only 1, 2, 3, 4, 5 were shorts. Guess what? It was the shorts that performed the best today. So this last one here, 6 cents versus 32 cents on another pretty decent short by Holly in the symbol L. And if I squish my 15-minute chart up, you can see stop loss is up here. This one probably the most unruly in the fact that it got about halfway up to its stop loss from the time that Holly called the short play here. Not something that we really like to see, but it was something that worked out if we stuck to our hard stops, which, by the way, before finally capitulating. So why did Holly close this one out? The good old reduced risk. Holly makes the entry here for the next 45-minute period. It's really not going sideways, it's grinding up. So the longer she spends in a trade and it's not moving in the proper direction, but actually moving in the opposite direction, she does have the ability to call it early, and she does that in this one. Loses 6 cents, but as I pointed out earlier, when you were short today, okay, look at these candles and look at these wicks. Yeah, the market's going down, but it's vacillating. Up, we're back to the highs, back to the lows of this candle. lows, highs, lows, highs. So it was a grind, right? And this is a perfect example. You know, Holly calling reduced risk on it. Sure enough, it goes back to the line. Now, good reason to be concerned about this one too. This one not so easy to read because the whole time it's head and shoulders above that 10-period SMA. But if we, had the fortitude to stick to our hard stop, which is not easy a lot of the times, you think, oh, why should I lose the whole amount? Why shouldn't I just cover for half? And sometimes that's beneficial for us. Happened to me today in a trade. I just happened to be right. I, in essence, reduced my risk, lost X amount. Had I stayed in it, I would have lost twice that amount. But sometimes it goes against us, right? This one is the case. Holly closes it out. We gravitate back down here. After we get this first close below that 10 period, boom, we get the majority of the move in that candle right there. And then a little choppy, getting back above the 10 period. And this was very common for a lot of stocks today because I'm trained, I talk about this all the time. As soon as you see that close above the 10 period, probably a good idea that momentum is no longer on your side. But due to the ebb and the flow of the market today, sometimes that was the case. Sometimes it was not the case. Sometimes they come right back down and behave. In any case, if you stayed in this one, we had an additional 26 cents on the table, but definitely the hardest one to read out of all the four that we just went over today. Okay. All right, so let's move right along here and talk about some of the manual windows that I like to follow here. And we're going to talk about basically this same pattern here, good old-fashioned range breaks. I like to showcase these patterns because number one, well, not number one, they're simple. They're about as simple as you can hope to get, okay, when it comes to a stock pattern. Can be in the 5-minute time frame, can be in the 15-minute time frame. But going back to, let's see, I forgot whose question it was about momentum. These are great windows for momentum, and I'm going to be talking about a few of these trades here. First one is my turbo breaks up and down, no resistance, which let me just get rid of the Holly windows here, make a little bit of room here. So here we have my turbo breaks up, no resistance. We're not even going to talk about the turbo down with no support because it was pretty junky today. But while we're on this topic, and I'm showcasing these windows, if you want these windows and you want to try them out, all you have to do is come down here to channel 4. When you click on it, you're going to see a bunch of tiny windows pop up. That's where all of mine, Steve, Andy, and Sean's favorite windows are. So you can save those windows to your cloud, and all of these windows that we're going to be talking about today are included there. So that's where you go if you want to get them. So we've got two different versions. We've got my regular turbo up and turbo down, and then we've got the no resistance version because all the stocks are at all-time highs, and the no support version because they're at all-time lows, which can add a little bit of fuel to the fire there as far as resistance and support levels that might stop an upside stock or catch a downside stock. In any case, only one decent play that I saw come through turbo up family, no resistance today. No big surprise there due to the nature of the market, but that one symbol was BFAM, BFAM. We're in the 15-minute version here. The closer we are to the open, I like to look at the 5s, but they're pretty much same story. Okay, here we are looking at BFAM on the 5-minute chart. We can see here's the opening candle. Now, developmental version, but I really like this candle right here, not because of the pattern which occurred over here, that range break, but I like the fact that this is a very long wick candle, all right? What it means is sellers took it all the way down, but they couldn't keep it there, and the majority of the volume of this candle was traded up here, right? So that's a good sign. Went all the way back down, they couldn't keep it down, kind of retraced most of that wick, but as time progressed, about an hour and a half into the market, we got this range break here, all right, as this new high was being popped. And it occurred while doing significant 1-minute volume. So making an entry anywhere in this candle would have been good, not too chasey. And then as far as assessing our risk goes, what do? We look back 15 minutes, not including the entry candle. So in this case, 5, 10, 15. This was the lowest point of the prior 15 minutes, not including the entry candle. So we got a nice risk area here. And the good news is, never even acted like it was going to go down there and stop us out. Just boom, 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 off to the races. Now, this is where the no resistance part comes in, because a lot of the times, if we were looking at these versions, we would have to consult the daily and go, okay, let's look back to the left here. Let's see where it might run into some resistance because they're range bound on the daily. But in these instances, they are not. When we look to the left, we don't see anything for the simple fact that the added criteria here is that these have to be at all-time highs on the daily or the lifetime. So when we look over here, nothing for it to bump its head into. So that's always a positive characteristic to have in a long trade. And we can see what BFAM did, right? Just slow grind up for most of the day. We draw a line up here where the highs topped out. What do we got? We got a huge reward area compared to our risk area here. So one of the only ones I saw come through today that presented inequality due to the nature of the market. But, you know, a lot of things were coming through here. They just weren't conducive as far as the timing goes and catching the range break there. So that was the one decent play that we saw come through. This version of Turbo breaks up, but the majority of the quality that I saw today is going to be coming through my Turbo down window. All right, some of the most crisp winners came through here, most notably Celgene. And of course, not a huge move, but the pattern was simply pristine, okay? So what do we have on Celgene today? As I stated earlier, this came through this version right here, and Celgene is definitely not at all-time highs and not at all-time lows. It's range bound by the daily. So when we see the pattern present itself, and keep in mind these are 5-minute candles here, got the big candle. Number one, we have a gap down. Number two, we've got a big move down in the first 5 minutes telling us that yes, indeed, there is a seller present, but the seller takes a break for 1, 2, 3, 4, 5, 6, about 30 minutes. We got this nice sideways consolidation here, and it's always the tighter that this is, the better that it is, all right? Remember that Holly play that I was pointing out. This looks very similar. It just happened in a lot quicker time frame. So I'm watching my window here. A lot of things coming through. Also, too, one thing I would like to add here is when this comes out, before I hit it, I'm always looking over here to think to myself, where could this thing run into some support? And we can see we didn't quite get all the way down here today, but we got a pretty good way there. That's why, and I have to give Andy credit for this little column right here, next high or next low, is telling us how much room this thing has based on the daily chart, right? So I don't even have to look at the daily chart if I don't want to, because we all know how quickly the markets move. We can just look here as these plays are coming through. I can see how much room that they have. And by the way, let's just pull this window over here so we can see what that value was at the time that the alert came out. So when this alert came out right here at 9 o'clock Central Standard Time, I can quickly look over here and go, this thing has 78 cents of room to the next level of short-term support. I don't have to look at the date. Room because, you know, I need more than that. I need more reward potential. So if I'm going to be risking, you know, 94.50-ish, let's call it. If I'm going to be risking 50 cents, I want at least 50 cents of room on the direction that I'm going here. And in this case, it was 78 cents. And more importantly, the pattern was pristine. So we make the entry here. We get sideways action. Doesn't act like it's going to stop us out anytime soon. We got the added benefit of the 5 period, or excuse me, the 15-minute period. And if I flip back over to the 15-minute, it becomes a lot more obvious. Once we get down here, 10 period catches up and just acts as the tapping hammer all day. Celgene printing new lows on into the close there. So just a very nice and tame mover in Celgene today, which was produced by the Turbo Breaks down window. And by the way, not only am I asking for 3 times normal 1-minute volume coming through these guys, but in this version right here, I'm saying, hey, we also have to have a relative volume of 1.2 and consulting our little next level of support. We can sum it all up right here. We know the volume is there. We know the pattern is good. We know we've got room in the trade, and it's off to the races. So that was a really good one in Celgene. The next one was this guy right here, BC. All right. Now, of course, the closer to the open, you know, I'm looking at 5-minute candles for a good while until we get, you know, enough 15-minute bars to make sense, which in my opinion is about 3 to 4. But at least for the first hour, I'm looking at 15-minute candles. Now, BC, a little bit different. We had a nice down move here, and then for 5, 10, 15, 20, 25 minutes or so, we go sideways. So good things here. We know the seller is present. We know the volume is kicking. Let's see here. A lot of stocks today, like BC, not doing monster on the relative volume, but we know it's doing at least a little bit above normal volume. We know there could be an undertow in the market today based on our compare count windows, so forth and so on. So we see a little consolidation period right here. It comes through our window. How much room did BC have in it today when it came through? Let's take a peek here. All right, so BC had at least 54 cents of room in it when it came through. I could go over here and kind of sum it up on the daily if that's what I wanted to do. My eyes would be drawn to this level right here. We didn't get quite all the way down to that candle right there, but we got pretty close. Also, look what's happening on the 10 period on the daily. Pretty uncanny. So if we make the short right here, here's our risk area. And by the time the day was through, this was our total reward area, which is significantly larger than the risk area there. So remember, it's the prior 15 minutes, not including the entry bar, 5, 10, 15, nice tight risk area, nice juicy reward area. And all we had to do is, you know, get a little bleedy over here on the 10 period, you know, but hey, you know, getting this move right here, hey, that's a pretty good move here as well before it got up here and got a little flirty with the 10 period. But then eventually came back down and took control of it again. So maybe a good time to cover either half or all of it. But, you know, hey, sometimes they stay down, like the Celgene. Sometimes these algos get a little bit crazy. And today was one of those days because I've queued up not only a couple of winners here, but this was prevalent for most of the day. And what I'm going to do now is I'm going to show you guys some losers, right? Some trades that looked beautiful. But when you have a day like today where we're going down, but we're going down and up as we go down, but the overall trend is down, these things are going to happen. And BMY was a perfect, actually, let's look at 6 first, because this one was just tragic. It really, this will get your goat every time, but it happens. That's the nature of the algos that run the market. So 6, a beautiful setup in 6 came out. Well, my windows are all shrunk up today. Okay, so this signal comes out right here as this nice tight little range is being violated here. I mean, about as tight as you could hope for. Entry candle right here on this little doji on the 5-minute, 15-minute risk is right up here. So another beautiful setup. Hey, the trade's working. Yay, everybody's happy. Goes up there and tags our stop loss to the T. All right, this is the 5017 level over here. Trade starts to work, boom, boom, boom. They go tag the stop loss right here, and then for the rest of the day, just pukes it up, right? Happens, especially on a day like today, and it's quite infuriating, but it happens, all right? But the good news is we don't lose a whole lot here, all right? Entry candles here, 50.02, 50.18. Yeah, we did lose, but we only lost 16 cents. The hard part of this is that it was a beautiful trade. It worked, but the algos took it up here, tagged us out to the penny. Say la vie, try again tomorrow. And the same case with BMY. Another tight little, let's see, my line's a little off there. Another tight entry here, right? Trade's working, everything looks good. You know, if we flip back over to the 15-minute time frame here, everything's working, but this guy decides to take a bounce, gets us out. In this case, our stop loss is right about here, the 15-minute high, not including the entry bar. So look how it wicks us out by a penny, only to head lower by the close. So the only reason I wanted to point these out is because, you know, on a day like today, this happened time and time again. You know, probably got me on 2 out of 5 beautiful entries, but, you know, it's the nature of trading. So, you know, a lot of the times, and there were a couple today that almost got my stops by 1 penny, but that's just the name of the game. So, you know, like to show the winners, but also like to show the losers as well. But the good news is on these, when we do lose, we can control our losses pretty tight here. And the ones that work are typically a lot bigger on that reward area than what we're risking, to the tune of 2, 3, 4, and sometimes 5x of what we're risking. All right. Well, Waleed, yeah, you could increase the stop loss, but that would kind of ruin the nature of the play, right? The nature of these real tight consolidation plays is we can risk very little and get 1 or at least 2, 3, hopefully 4x of what we're risking on these plays. So yeah, sometimes it's just going to happen. You know, it's just the nature of the beast. So, you know, we could change the rules, but probably not advisable. All right. Wow, guys, I did not realize we were 1 minute away. Okay, fair enough. So I've queued up something that I guess I'll save for next time, which is this over here, generating high probability list, using our back tester and using something that I always shy away from when we're back testing, which is symbols, right? Taking all the symbols that do well. But I've come up with a new thing that I think everybody can find very, very helpful and interesting. I've been testing it myself, and it looks like there's some promise there. So I tell you what, we're going to tuck that away and save it for next Monday. Want to thank everybody for popping in here. Time got away from me, and I guess that's not necessarily a bad thing. So want to thank everybody for popping in. So Scott, if you're ready to walk us out and talk about the discount codes on how people can save on a new subscription or an upgrade.
Right on. So
I think we're ready.
yeah, right on. There's a new ebook out. Actually, a series of ebooks. There's 3 that belong to the same series. Trade-ideas.com/setup. Just put in your email address, get the download link. It's about swing trading. One's about active investing. One's about range breaks and pullbacks. Jamie contributed a chapter to them. Each one is organized by a topic, and there's 2 chapters per ebook, so they're free. Lots of good stuff. Go ahead and get them. We've got a podcast. We should have a new one up, at least one before we have the July 4th holiday week, but we'll see if we get one up this week for you. We didn't last week, but there's a lot of great back issues with guests. So just subscribe to Trade Ideas Podcast, search for Trade Ideas Podcast wherever you listen to your podcast and subscribe, and then you get the next one as soon as it's ready, and you can check out the back issues with interviews in the meantime. We've got a code. Holly in June is good for the rest of the month, which is only a few more days. Holly in June saves 15% off the first month or year of Trade Ideas or off of an upgrade. So if you're standard and are jumping up to premium, use that code when you change your subscription type after you log in on the main page. And my connection dropped.
Well, it appears we lost.
Yeah, those usually don't last too long.
There you go.
Been having some intermittent outages last couple of days trying to solve it. But yeah, if you're a standard subscriber and want to upgrade to premium, just use that code after you log in on the main page and click on change your subscription, plug that in, save 15% off your first installment of your new plan. Any questions, email info@trade-ideas.com. That's the best place to send all your questions. It goes into our help desk software and gets routed to the appropriate team member. You can follow Jamie on Twitter @QuantBot. The co-host is usually Steve Gomez, and he's @TodayTrader. We've also got @TradeIdeas. Facebook.com/TradeIdeasPro is the Facebook page to like and follow and share. Thanks, everyone. We'll have a recording up later on tonight or tomorrow. And thanks, Jamie.
Hey, thanks, Scott. Thanks, everybody, for popping in. We'll see you guys